Okay, the first question is, I'll answer it first, Monisha. Then after I start the fifth day presentation, you can take and then put it on the screen. If a trust files IT returns beyond the due date, what are the consequences for filing delayed returns? Man, I've been telling you right from the day one, the first day session, the conditions for exemption includes filing returns in time. Section 12B may says that. So if you don't file returns in time, you're not eligible for exemption under Section 11. We talked about various exemptions. Broadly, we can classify them into 6 groups. You're not eligible for claiming any of those benefits. This was still last financial year, 21-22. In 22-23 onwards, I'm not very sure about the year from which the new law is applicable. I think it is from current year. I'm not very sure about it. I'll confirm that to you. Now, when you don't file returns in time, your income will be computed under Section 1310. Your income will be computed under Section 1310, which means that all your expenses incurred towards the objects of your organization will be allowed. Yesterday I was explaining all your expenditure incurred towards the objects of your organization, the trust, will be allowed as deduction to you. This is not an application. Application is a broader term. We have already understood that. Only the expenses, which means that your capital expenses will not be allowed if you're filing your returns late. Okay. And the second thing, repayment of loan will not be allowed. Any application of loan will not be allowed. Capital expenses, if you are not claimed it as application in earlier years, you may get depreciation on that. You will get depreciation on that. Any contribution to another organization will not be allowed. Any application of corpus will not be allowed. So the balance amount will be subject to tax if you are filing return late now. If you are filing returns for earlier years, this Section 1310 benefit is not available to you. You don't get the benefit of Section 11. Your income will be taxed as any other income, and either under the PGBP, profits and gains of business or profession, or under income from other sources. As I told you, most of the time, department will not agree to give you any deductions. If you are a purely charitable organization, purely social organization, if you are a school, then you can claim as a business the income and the expenses incurred towards earning the income business, and then the net profit will pay taxes. The next question, revalidations. Revalidation is for all the existing 12A or 12AA registered organization. Revalidation. It is not for the others. 12A and 12AA registered organization. Your 12A or 12AA is now revalidated into 12AB. And this is a very simple process. If you file your application correctly and completely, and you get, because this is automated, fully automated, you get the renewal or the revalidation, the revalidation, which is available, or which is available to you for 5 years, will get it automatically. Okay. This is for the existing organization that have 12A and 12AA. And there are people who missed it. In fact, there are various subsections under Section 12A1AC. There are 6 subsections under which you can file for the renewal revalidation. If you make under the wrong section, then you do not get the correct benefit. I have come across people file the application under the wrong subsection. Now, government has given us an opening, an opportunity for us to correct the mistakes and then get it rectified. In fact, we just got, today only my office team came and informed me for one organization who have come to me after all these processes over, and they did not file the documents correctly, and we withdrew the wrong document and filed the correct document, and within a week's time we got the revalidation on the renewal certificate. Okay. I hope this is clear. And there are any other queries, we'll see that after we complete the sessions. And kindly just hold on. Okay. Yeah, hope my screen is visible to all of you, right? We have covered everything, almost everything which are relevant for, uh, trust or society's exemption. And today we'll be covering ATG exemption, books and records we maintain, and also the audit. Okay, will be. I'm sorry, it is missing the audit also will be covering. And I want to take a session on TDS, tax records source, because many of us are making mistakes in TDS provisions. Our clients, we keep informing you, we keep coaching you, we keep telling you, we go extra mile in the sense that whenever you have doubts, you can call us, and then we are here to help you. But there are others who have trouble with tax record source and also with the cash payments. So for your benefits and for our own clients' benefits, I want to take a session, but that will be done next week. Initially, I thought I will do it tomorrow, but because we have our own training, office training, staff training tomorrow, I'll get it done next week. I'll inform you when it is. It will be on a weekday between 3 and 4. We'll go to the exemption in section ATG. Basically, under ATG, there are 4 types of deductions available to the donors. Okay, right? First is 100% deduction available. 100% deduction available. 100% deduction available without any qualifying amount. Okay, what is it qualifying amount? I'll explain to you when we explain about ATG exemption, which we can pass on. Organization like trust societies can pass on. This 100% deduction without any qualification. Deduction means from your income. Supposing your taxable income, gross total income is, let's say, 10 lakhs. And your donation under ATG is 1 lakh. If your donation is to either to Prime Minister's Relief Fund or to National Defence Fund or to Chief Minister's Relief Fund, you get without any qualifying amount, you get 100% on this. So you get 1 lakh as deduction, and your taxable income will only be 9 lakhs on which you'll be paying taxes. Okay, the next one is 50% reduction without any qualifying amount. The same example. Same example, let's say, suppose the amount of donation is ATG, okay, but the deduction available will not be 1 lakh, it will be only 50%. And there is no qualifying amount, so you will get only 50,000 rupees of deduction, and the taxable income will be 9.5 lakhs, and on which you will be paying taxes. The next is 100% reduction subject to qualifying amount. Okay, I'll just come back help you with the qualifying amount. 100% reduction, whatever you pay without, instead of here, we have seen 50% reduction in this case, okay, right? Where we are saying if you are donated to 1 lakh, you get only 50,000. The next is 100% reduction, but subject to qualifying amount, okay, right? And what is that qualifying amount? I'll just explain it to you. And these are all again related to government and or to the government sponsor or government recognized association. Okay, it says that institution notified by the government for development of infrastructure for sports or sponsorship of sports or games. So to which when you give And also for family planning, when you give it, you get 100% reduction, but subject to your qualifying amount. Okay. The next one, qualifying amount. Let's say, we take the same example. A donor income is 10 lakh rupees. And he can donate only 10% of his income, which will be 1 lakh. Supposing a donor donates 2 lakh rupees, he will not be eligible to claim deduction on 2 lakh. He will be eligible to claim only 10% of his total income, which will be 1 lakh. And on this, he will get 50%. Okay, right? So 50% he will get. Which will be 50,000 rupees. Even though the donor has given you 2 lakh of information, he will get only 50,000 deduction as deduction. This is the fourth category, which is applicable to all of us, all the charitable organizations, societies, trusts, etc. So, we already see 100%, 50% reduction subject to qualifying amount. Qualifying amount is the adjusted gross total income. What are the conditions? In fact, we'll see it elaborately later. The organization should have been formed as a charitable organization, either as a trust or a society or a company. Now this is section 8, not 5. 25, the section 8 company. Again, here is also changed now. We have a new law. And it should be established for charitable purposes. Okay, and income should apply only for charitable trust. Sorry, charitable purposes, and not for any other purposes. Because they give a small leeway for you. You can spend 5% of your income for religious purposes. Does not mean you are given freedom to spend your money on religious activity. It is because many of us, for example, the Christians, we have Christmas celebrations. The non-Christians, most of them, almost every one of them spend on puja expenses. Okay, right? And there were tax officers were saying that whenever they saw puja expenses, saying that you are doing religious activities, so you are eligible for ATC exemption. So to help such organization, which means they are not doing explicitly religious activity, just for small amount. Government said you can spend not exceeding 5% of your total income on religious purposes. Okay, please do not take this as a license for you to do your religious activity. And it should not benefit any religious community, particular community. And we should keep regular books of work. And we'll see that little more when we see the renewal part of it. As I told you, the institution should be constituted either as a charitable trust or should have been registered in society or under any other law, section 25 of the Companies Act, or a university established by a law, or any other education institution recognized by government or by university established by law, affiliated to any university, okay, established in India. So the take for example the institutions like IIM, IIT, or chartered accountants course, cost and management account course, company secretary course, and there are a few other courses which are directly by the law. Okay, central government enacted law and has come into existence. So these are all constituted for educational purposes. So they are eligible for ATG. There are private universities, okay, that have come into existence because of the state laws, state government passing laws. That is also an education institution. And if there are any other college or institution affiliated to such universities, they are also being eligible for ATG exemption. And they should be registered under 12AB or 1023C as charitable trust. And they should not have a business income. In case they have business income, they should maintain separate books of account. Okay, we have been talking about this business part of it all these 5 days. In fact, I'm very happy to inform you that one of the participants of this training, when she listened to, this business activity, the service charges for the self-help groups loans, so she went to the bank saying that this is what I understand, I'm not supposed to do that, and I have another trust. Will you be willing to give the service charges to that trust? The bankers possibly responded, and she called me today morning and I said, right, and informed me that. So I'm really happy. So please look at your organization also. See how best, because this year you will not have the escape route. You have to pay taxes, but at least future you can save. So when it is a business, even if it is incidental to the main objective of the organization, it should not exceed 20% of your total income. And when there is a business income, you should maintain separate books of account. Okay. And the next condition, the income, the donation that you get should not directly or indirectly used for the purpose of business. The ATG donations should not be used for the purpose of donation, for the purpose of businesses. Then you also need to issue a certificate to the donor in case you have a business activity that you maintain separate books of account, and donation received from the donor is not used directly or indirectly for business activity. Okay, is not used directly or indirectly for business purposes. So these three conditions are essential in case your trust has some business activity. Okay, right. So if you want to repeat this again, in case your trust has some business activity, you should first keep separate books of account for the business activity. Number two, the donation that you receive should not be used for the business purposes, directly or indirectly. Number three, to the donor who gives you ATG donation, you also give a certificate, okay, right, of saying that you are keeping separate books of account for the businesses, and the donation that is raised from him and from others is not used for business purposes. Okay, so this you'll have to remember that. And there should be a clause in your memorandum, okay, or you should not have a clause saying that you can give the money, transfer the funds to any other charitable trust other than any other trust other than charitable. In other words, you should not transfer money for religious purposes or to religious trusts. So there should be a restriction that the money that you raise under ATG should be used only for charitable purposes. And in case you want to transfer to another organization, even the assets also, the other organization will only be charitable in nature and it will not be religious in nature. You will not be benefiting any particular religious community or caste. You will keep separate books of account for the main, you will keep regular books of account for your organization. Separate books is only for business, okay? You'll keep regular books of account for your organization, and your organization is approved by the principal commissioner. Apart from your 12AB or 1023C, you also need to have registration with the Commissioner of Income Tax. And the next one, in fact, all of us are aware of all these things. I don't need to explain much about it. The next one is that by 31st May, we need to file Form 10BD and the IT portal. You have the privilege to correct or rectify the mistake, okay, right? Or add, delete, or update whatever you have done, so that the records will be complete. You are allowed to do that. And then after doing this, you need to download the certificate Form 10BE from the portal and issue to the donor. Okay, right? ATG registration process. This ATG registration process is very, very similar to our 12AB registration. Okay, right? All the existing organizations need to revalidate their exemption under Section 80G. all the existing ATG organizations, which means that all organizations that enjoyed ATG earlier will need to go and revalidate their ATG, and they have to file the application for ATG revalidation. And once when you file the order, the commissioner will go through that, check the application, and if he's satisfied that you are fulfilling the conditions, then he will pass an order granting approval for 5 years. Now the ATG approval is valid for 5 years, you will get the 5 years approval. If your application is not complete or the commissioner finds that it is not right, then he will not pass the order. He has got 3 months time from the end of the month in which you apply. This is only for revalidation. Please understand that, okay, right? And right now, ATG revalidation is also automated, handled only by CPC. Fresh application. This is very similar to what we have understood, what we talked about 12AB also. You're a fresh organization, when you're a new organization, you file application for ATG, okay, right? And once when you file application, you will be granted provisional registration. And provisional registration is valid for 3 years. Okay, provisional registration is valid for 3 years. But you have to apply for regular registration within 6 months of commencing your activities, okay, right? Within 6 months of commencing your activities, you'll have to file for regular approval, regular ATG approval. And once when we file regular application, commissioner will ask for the documents and make inquiry to make sure, to ensure that, or to satisfy himself that the activities of the institution are genuine and you fulfill the conditions, all the conditions laid down. And you fulfill all the conditions laid down in clauses 1 to 4. These are the conditions which already discussed there. I'll just quickly rush through this condition. Number 1 is that it is established in India for charitable purpose. Number 2, it should not be used directly or indirectly for business activity. Number 3, it prohibits transfer or application of the income or assets, okay, for any purpose other than charitable. So you should not transfer your income or even the assets for religious organization. It should not be meant for a benefit of any particular religious community or caste. The institution should maintain regular books of account, and you should already have 12AB or 1023C exemption, and it should be valid. It should not have been cancelled. Okay, right? And your institution you only talked about should have been as a trust society or Section 8 company or university or educational institution. Okay, right? Or finally, in fact, I don't explain that. If your institution is financed wholly or in part by the government of India or a local authority, you are eligible for ATG. Okay. Once when you file, after going through the genuineness and all the stuff, the commissioner will grant renewal for 5 years. If he's satisfied, he will grant renewal for 5 years. If he's not satisfied, he'll reject. And also, if it is an existing ATG organization, he will reject and cancel the existing ATG also. Okay. Here, for the renewal of exemption, he has 3 months from the end of the month of the application. Sorry, 6 months. I'm sorry. He has 6 months from the end of the month of application. Commissioner response. We already talked about 10BD and 10BE also. So I will not spend time because all of us are aware of this 10BD and 10BE. What are the other requirements from ATG? ATG donation is available to the donors only when they make payment by any mode other than the cash. Okay. And there is a limit. The amount exceeds 2,000 rupees. Okay. It has to be by check, online transfer, whatever mode, but it should not be in cash. Cash is not allowed. Okay. 2001 onwards. Supposing you are a trust for religious and charitable, you are not eligible for deduction under Section 83. A donation in kind also do not qualify for ATG. Let's take the example. We have a school. In the school, one donor comes and gives us for the lamp and fixes air conditioner. And he also gives the bill with you. And you know what is the amount of air conditioner that is fixed in the school, which already has ATG. Even if the donor asks for ATG exemption for the air conditioner that is donated to you, he is not eligible. Okay, because not a donation in kind do not qualify for ATG exemption. Okay. I move on to one more one. Earlier, when we talked about corpus donation, I think we discussed it on the second day, corpus donation, the various exemptions. Second or third day we discussed it. Corpus donation, what I said is that it is from the donor who gives the money. It should mean the corpus donation will become corpus donation only when there is a specific direction from the donor that it shall form part of corpus of the trust. Only we can get a specific direction from the donor, it is corpus. Whereas here, in case of ATG organization, this is a specific organization. This refers to, this is an organization. Yeah. See, this is an organization. This could be a temple, this could be a mosque or gurudwara or church. Okay, right? The amount that you receive, okay, the church or the temple or the mosque, the amount that they receive as donation towards renovation or repair. Okay, renovation or repair. Okay, and this church or the temple needs to be notified by the central government, okay, in the official gazette as a place of historic, archaeological, or artistic importance. Okay, right? Or to be a place of public worship. Okay. Only when government notifies that, or if you have a church, because in Chennai we have old churches. There are churches more than 200 years old, okay, right? If you are interested, you can approach the government and ask for a notification saying that this is an old church, very old church, more than 200 years or 250 years old. We want to renovate and repair the church building. We want to raise funds, so please grant us ATG exemption for the donation. And when government grants you ATG exemption, right? In such cases, the donor gets benefit. And what section in this ATG 2B says is that, not ATG 2B, section 11, 3A and 3B says is that the board, the church or the mosque or the temple or the gurdwara, the board of this church, or if it is managed by a trust or by a company, they can, at their option, okay, treat the donation as corpus of the trust, corpus of the church or corpus of the institution. The choice is with the organization, with the management of the church or the temple. Normally, when we talk about corpus, it is the donor who gives specific direction saying that it is yours corpus. Only in case of temples or in case of churches, which is of historical or archaeological importance, our government says that this is a place of public worship and they notify it, okay, in official gazette. Then in such church or temple, the management, they can take a decision to categorize, to classify a certain amount of income as corpus of the trust. They have the freedom to decide on that. What is the benefit of corpus? It is not an income at all. You don't need to worry about spending 85% of the income. Okay, why this is given? Possibly government thinks that when you raise money, an old temple or old church building, renovation may take more than a year. You may not be able to spend the money. So in which case, instead of going for the other options, government says you make use of the simple option. Take it as a corpus and then you spend it whenever you want it. Okay, right? But when the board decides to treat an amount as corpus, they need to fulfill the following conditions. What are those conditions? The amount that you say is corpus can only be used for the purpose for which the voluntary contribution is made. Or other words, in simple terms, the amount of corpus that you are categorizing in the board can only be used for renovation or repair of the temple or the church or the mosque or the gurdwara. Okay. Next one, you do not apply the corpus as donation to another organization or to anybody else. Then you maintain corpus in a separately identifiable place. What do I mean by that? Either keep it as an FD, or if you have it in the bank, you may make sure that that is the amount. It should be, you should maintain corpus as separately identifiable. And you should not put the money in any other mode other than 11.5. Okay, right? When we talk about charitable, it's only 11.5. When you fulfill these conditions, the amount that the board decides to treat as corpus, you can treat as corpus. And you can go ahead, fulfilling these conditions. Okay, these conditions are very similar to 11.2 also. We discussed 11.2, I mean, 2 days back. 11.2 also, where it is accumulation or setting apart. What is the big difference here on 11.2? 11.2 you need to find form 10. Here you need to find no form. There is no need for to find any form. The only thing is that you should have a board resolution, fulfill all these conditions. Okay, right? Once when you do this, it is corpus of the trust, and you can take it as corpus. And supposing the next year you withdraw money from the corpus, this will become income. This will become income, and you can use it for your regular activities. Other corpus, what happens? When you apply anything out of corpus, it is not application. Whereas here is an exception. Okay, right? Very important exception to us. For the renovation of the temple or the church or gurdwara or mosque, the amount that you earmarked as corpus kept in the corpus in a separately identifiable bank account. And when you withdraw that, the withdrawal, you can use it for renovation, repairs of the temple. Okay. And it will be allowed as application to you. But normal circumstances, whatever amount you are withdrawing from corpus and spending, that amount you spend is not allowed as application to you. Okay. These are the records very similar to the other corpus donation. I'm not going to spend time on this records. Okay, right? So you please go through this records presentation, and then if there are any queries, anything, feel free to put it in the chat box. In the WhatsApp group. We'll be happy to help you with that. Okay. Now comes maintenance of books and other documents. Before we go into maintenance of books of accounts. Okay. Thank God we are still on live because there is a power cut here. Thank God. Okay, right. Before we get into the actual bookkeeping, an important change was introduced, I think, 2 years back. Okay, explanation made to section 11.7. What it says is that only the amount actually spent by you during the year or paid by you during the year as the trust or as the society, only that will be allowed as application. Okay. Not the amount of expenses that you have incurred. Let's take the example. Okay, I'll take the example. I'm sorry, whiteboard. Okay. Let's take the example. You follow accrual basis of accounting. I'm sure all of us are aware of accrual basis of accounting. What is accrual basis of accounting? We account the expenses as and when it is incurred. Okay, for example, a staff worked with you, for a month, and his salary is due. So on the last day, 31st of May, what you do, you write an entry, salary 10,000 rupees or 1 lakh. Let me put 1 lakh for 5 employees. And you say salary payable 1 lakh. And next month by 5th, you pay this salary payable, this amount. Why do you want to follow accrual basis? Because only this will give you a correct picture. What is my cost? What is the amount that need to pay? Only that will give you correct picture. Cash payments or cash basis of accounting will not give you a correct picture of account. So universally, people encourage cash basis of accounting, but income tax department feels that this provision has been abused by us or misused by us. So they say only what amount you are paying, actually paying, will only be allowed as application to you. Whatever actual payment, only that will be allowed as application to you. Supposing the previous year, okay, right? We are not talking about in the year in which you are paying payment, that will be allowed as application. In the previous year, you claimed some expenses payable as application. For example, you follow accrual basis of accounting and you put salaries as cost, salary payable as a liability. And because salary is cost, you have taken that as an application and closed it. Next year, when you make payment of that payable amount, that will not be allowed as application. Okay, right? This is only for payment side. This is only for payments, not for income. Income, you have the option to follow accrual or follow cash basis. As we talked about it under section 11, exercise of option under section 11.1, explanation 2, where we said income not received. I can use the deemed application clause 11.1.2. Okay, right? Sorry, 11.2, 11.1 explanation 2, right? Okay, we can use that. Income, you have the option to account under accrual basis. Whereas payments, for tax purposes, you need to follow only cash basis. If I'm a company, right? If I'm a company, Section 8 company, of late, Section 8 companies are becoming popular now. If I'm a Section 8 company, Companies Act mandates that I follow only accrual basis of accounting. Whatever is payable also needs to be accounted. So what needs to be done is that you may be following accrual basis of accounting, but you'll have to remove all those payable and take for IT computation for tax purposes only what amount actually paid by you. Okay, right? Maintenance of books of accounts, section 12A(1)(b). What it says is that when your income exceeds maximum amount, which is not chargeable to income tax, the maximum amount which is not chargeable to income tax is 2.5 lakhs. If your income exceeds 2.5 lakhs, okay, right? You need to keep books of account, the various registers. If your income does not exceed 2.5 lakhs, then you have to keep cash book, bank book, ledger. The other register that we are talking about need not be maintained by you. The choice is yours, okay, right? And section 12A also says, the rules will stipulate, how you should keep. In fact, rule 17WA is also given. I'll skip this next slide and move to the next one. When we talk about books of account, what is books of account? Okay, income tax law says that, Act says that books of account includes ledgers, day books, cash books, account books, and other books, which are kept in the written form or electronic form or digital form or as printouts or data stored in electronic form or in digital form, whatever it is, okay, right? Or in simple terms, your books of account, you can keep it either in manual form, you can put it in computer, tally, have it in your own office, or this can be in the cloud also. That may now today Zoho Books is there in the cloud, from anywhere you can access, or it can be in the digital form. You have the backup, and then anytime you want, you can get the details, or it can be in the printer form, printouts, keep on the final printouts, the choice is yours, okay. Or you can even save. You don't need to take the printouts, you can even save the PDFs and then save it in your system, and it should be available. Mind you, you say that you're saving the system. Tomorrow the computer is stolen, X is gone, Y is gone, or hard disk crashed. All those excuses you will not be able to give. Because you need to keep enough backups and then store it in different places, not in your own offices. Okay, right? Document includes electronic document also. What is electronic document? Electronic record, it includes data, record, data generated, image, sound, blah, blah, blah. Whatever you do it in computer, however way you save it, it is also included for the purpose of maintenance of books of account. It is also classified as a document or recognized as a document for your purposes. It's actually good news, which means that we can keep our records in any form. That's why I said, right from the day one, it can be manual one, or it can be in Excel also, provided you keep it systematically, you're able to have that, or you can have a software to keep all these documents. If you can design your tally, some of those records you can keep it in tally. We have been talking about it. The choice is yours, okay. But the only thing is that you should keep the books. The record should be available. That is the fundamental criteria requirement. And Rule 17AA was introduced on 10th August 2022, but unfortunately, audit report in Form 10B and 10BB wants us to report that for the entire financial year. They are not saying that you report only from 10th August. The report says that asking us to report whether you are maintaining many things. We'll just see few, okay, right? Do that. And Rule 17AA, basically want to say, it says manner of keeping books. How you can keep the books of account. Place of keeping, where you should keep the books of account. Period, how many years you should maintain the books of account. All these are given in Rule 17AA. Manner of keeping books. Your books and records. I'm not saying it is not, I'm not saying only the account books. Okay, even the other documents, okay, specified in Rule 17AA can be kept in written form or electronic form or digital form or as printout or as data stored in electronic form, digital form, any other form of electromagnetic data storage. The choice is ours. The choice is yours. How do you want to keep it? What form you want to keep it? You decide and you keep that. Okay. But what the fundamental question or the underlying question is that you must maintain books of account and other documents specified under Rule 1, Sub-Rule 1 of Rule 17AA. And where it should be kept? It needs to be kept at your registered office. What is a registered office? Many of us have registered a trust. And we have the address in the trust deed as one. And for PAN also, we've given our address. For practical purposes, tax department will treat only your PAN address as the registered office address, unless you change the address in the PAN. And wherever the address is given, you are expected to keep your books of account in that place. Today morning, I was reviewing another organization's 12AB revalidation. There was some problem, so my team brought the application to me. I thought this organization is functioning somewhere close to Punnamalli, because that's a place where they have their own building and their own office is there. In the sense that place is there. But when I saw that the registered office, as per the tax department, is close to us in New Audi Road, Kilport. Okay, so if that is the case, if the department's record says your registered office is whatever as per PAN, then you're expected to keep the books of account at your registered office. Okay, and we'll see anyway, we have a little more to go through in this registered office, so we'll see that little later also. And in order to keep the books of account and the documents, other documents, I told you there are 10 different sets of documents that you're expected to keep that are to be maintained for a period of 10 years from the end of the relevant assessment year. Okay, for example, our financial year now is 22-23. We call this as previous year. Our assessment year is 23-24. Sorry, 24. From the end of the relevant assessment year means I need to maintain the records for 11 years. Plus the year current year. So in other words, I must keep records. When I say records, not the books, not the printouts alone, the vouchers, the bills, the various other registers that we talked about. All these are to be preserved for a period of 12 years. Totally, you need to preserve that. So please remember that. And if you have not prepared, please at least make yourself, get some storage space where you can store your records. Okay. In case there is any hearing for escapement of income under 147 or 148, this 11 years will not be applicable. If it pertains even the older period, till that is concluded, you have to maintain those books also. Okay. Anyway, this for many of us may not happen, but in case it happens, you'll have to keep those books also. We talked about here, the books are to be maintained at the registered office. Okay, right? In case when the management wants to keep the books in another place, the board wants to keep the books in another place, or when your trust deed says your registered office is New Audi Road, Kilport, whereas you are keeping the books of account in Punamalli, what you should do is that you should pass a resolution in the board, okay, saying that the books of accounts of our organization will be kept in that place only. And within 7 days of the resolution, you need to intimate the jurisdictional assessing officer. This means that your income tax officer, don't give it to them. You have to give a return intimation to them. You have to give the full details of the address or other places, okay, where you are keeping. Supposing you are keeping your records not in physical form, not in tally in your office, you are having it in cloud, you have to give that details also. Because tomorrow if the department wants to verify, they will have access to that. They know where to approach. This letter needs to be signed by one of your trustees or the board members, okay, or by the CEO. Any doubts on this? In fact, the very first day, I talked to you about 10 different main areas where you need to keep the books of accounts. I'm sorry, I thought I had that slide with me, but unfortunately, I'm not having it. We have covered many of those main areas where the books are to be maintained. Now I'm going to talk only about the rest of the areas. So please go back and go through the presentation on the main areas under which you are expected to maintain the books of account, or books, documents, not books of account, documents, and ensure that you're having that. You may not have the requirement to keep documents for all the ones. Okay. Wherever it is relevant, you should keep the records for you. Books of account, you should keep cash book, bank book, ledger, and all those things. And also you should keep copies of invoice or bills issued by you. It should be machine number or serial number. It has to be number, okay, right? And whenever there are some of us who are doing services and we raise invoices, the service could be giving or place on rent, okay? And that should be available, which should be machine number. or if you're running a school, the school fee, the receipt, those things need to be preserved. Okay, right? Receipts, counterfiles of receipts. Okay. This is only for the services rendered. Normally, this is for the services rendered. Receipts are for the donations. When you get donations, or if you follow, accrual basis. In other words, if you give them credit, you may issue receipts after a few days when they make payment to you. In which case, the receipts also needs to be preserved by you. Then you need to keep all the vouchers and bills for the payment in respect of payments. Okay. They want us to keep original bills, not the photocopies. That's why I talked to you yesterday or day before about the original bills, keeping that. Okay. Right? And you also need to keep any other records that may be required to give true and fair view. For example, if you're running a school, only cash book and bank book and ledger or the receipt book and the vouchers will not give true and fair view. Because if you're running a school, you will have to have a fee collection register. You'll also be having students' fee registered, wherein you would like to know the arrears of fees. For lab, you may be having a lab stock register. Okay, right? Library, you will have a register for library. And sports goods, you will have a stock register. Of course, all these sports goods you may condemn year end. At least during that year, you will have those registers, inventory register, if you want to call it. An investment register. All these registers, okay, which are otherwise not mentioned here, you'll have to keep that. And this register, when we audit, when we go through all these registers only, together it gives us the comfort to say your statement gives true and fair view. Okay, right? So you have to keep all these things. In case there is a business undertaking, I already talked about this business undertaking, separate set of books should be maintained by you. Income means records relating to properties. I'm covering only those registers or records which I have not covered earlier. Okay, right? In case of movable properties or immobile properties, you have to give details of the properties, cost of acquisition, registration documents, etc. And if there is a sale or transfer, then you have to give net consideration and amount utilized for acquiring new assets. You'll be doing that. Movable properties mean the normal one, what we normally give. So the immobile properties, I don't know how many of us have this immobile property registered. Please start maintaining from last year's onwards, if not earlier. Okay, and you should give the date of acquisition of property, total amount paid for acquiring the property as per your books. This will include the stamp duty, the registration charges. If there are any brokerage you're paid, any commission you're paid, all this will be included. And the details of the property, the address, all those details, registration details, where and what number and all stuff. If you get Patta, Chitta, Pahani, Alangal, all those information should be given. And what is the purpose of or use of this property? Where you are using, what is the use of the property? In case of sale or transfer, you will give the other details. Okay, right? So again, I'm repeating, this is only for illustrative purposes. You can design for your own use, whatever is the requirement. Okay, right? This register is mandatory for those of us who have immobile property. If I do not have immobile property, if I do not have land in it, then there is no need for us to maintain this register. There is no question at all. Fixed assets register, we normally maintain this. This is just an illustration. We can go through this also. Okay. Specified persons. We already discussed the specified person. Who are the specified persons? We talked about specified person includes the founder or author, the board members, the trustees, and the manager of any institution. We talk about any person donated more than 50,000 rupees up to the financial year, up to the previous year, up to the previous year, which means that including all the old contributions. If somebody has donated 50,000, more than 50,000 rupees, then he's also a specified person. Okay, right? And relative of these people or specified person, any concerns or organizations where your promoters or your board members are also member there, and they hold more than 20% shareholding there or rights in there, that concern, that company or the business is also specified person. So you have to give details of the name of specified persons. Very important because this information we will not know, only you have to give. And it also says the relatives also. Yesterday we saw as relatives, parents, grandparents, spouses, their children, grandchildren, and their spouses, husband and wife, or husband or wife's brother, sister, their wives, and their children. Okay, so it goes up to grandchildren, and you need to keep a record of these details. I don't know how we are going to manage that, but this is necessary that you should keep. And also, we need to give the transactions with this specified persons. Okay, details of the transactions, nature of transactions, document to the effect of the transaction. Supposing if you pay salary to him, right, remuneration paid to them, then appointment letter should be available. You give vehicle, board minutes should be available. Why you are giving minutes? Vehicle, okay, right? So the relevant documents needs to be available. And this is what we have put in the form of a register. I'm sharing this PPT to you. You can go through this, okay? I complete this and then now I'm going to take up the audit. Audit, I'll be very quick and then I'll complete it faster because why I'm talking about audit is that we have come to you only for all the information and you are expected to keep all these details. If you're not keeping all these details, then we will not be able to give those information. And when we aren't giving those information, and your audit report will be incomplete. When your audit report is incomplete, you are not eligible for exemption under section 11.1. And your income will be computed under section 13.10. When it's computed under section 13.10, you don't get the benefits, okay, right? You will not be able to enjoy benefits like setting up or accumulation for 5 years. 11.2 will not be there. Option in the section 11.1, and explanation 2 will not be there. Income received this year, applied next year, that will not be there. Or arrears of fees, so I could not apply. That benefit will not be available to you. Okay, so please remember, you need to, have all these details. Only then we chartered accounts will be able to give the reports. The same thing is true even for books maintenance also. You don't keep proper books of accounts. Even if you fail few areas, it could be detrimental to you. Okay. And audit report form 10B. Now this year they've given two forms. You are given a form 10B on form 10BB. Form 10B is applicable, form 10B. Till last year, 10B is the form for every one of us. 10BB for 1023C organization. Form 10B is applicable where your gross income exceeds 5 crores. Your gross income, total income exceeds 5 crore rupees. Okay, right? Many of us may think, oh, I'm safe, I'm not having income more than 5 crore rupees. Look at the next condition. If you have received any foreign contribution, okay, right? What is foreign contribution? Because they are given the subsection also, right? They have not mentioned directly or something like that. They are giving section 2.1 in clause H. Here it says foreign contribution also includes income from foreign contribution. In other words, this year you do not receive any foreign funding at all. Let's say you have only about 5,000 rupees in your FCR account. Otherwise, the bank will keep charging commission from you, bank charges. For that 5,000 rupees, they are giving you only 100 rupees as interest. Even if you get 100 rupees, this will be deemed to be foreign contribution, and it is better that we go under Form 10B. Okay, right? And you apply any income outside India. We had detailed discussion on application of income outside India. If you apply any income outside India, then you have to go under 10B only. There are sometimes, I get people coming to me and saying that, brother, I'm going to US, or I'm going to UK, or I'm going to Australia. I have an invitation to preach in the churches when I'm going there. Please note that when you go there to preach in a church, then it will be an activity outside India. Okay, right? And the application of income outside India will apply. And but if you are going there for raising donation, raising income, that's a different one. Okay, right? And in case of Form 14, 10B, there are 49 areas in which the details are required, and most of them are very, very critical, which requires a lot of information from you. And this information will be able to collect only if you keep proper accounting records and other documents. I'll just take some of those details. Okay, they want us to give you, they want us to give details of your registration, whether your provisional registration, approval, all those details you need to give. And I'll just come to that one. Okay. They also want us to give details of the authors, founders, trustees, society members, governing council members, okay, and also shareholders holding more than 5%. So we need to give all this information. And mind you, we will not know this information unless you give us this information. So you'll have to give this. And also you'll have to give the name of the person and the relation. The relation is basically the designation of the office. When you have to give their ID, which means PAN or Aadhaar, address, change in office. You need to give specified person list, okay, right? And also the other details. And you have to give the transaction with a specified person. And I tell you, in Form 10B, it is elaborate. Because we have already gone through the Form 10B, it is elaborate, right? And they want, in case of you're given income or asset without adequate security or interest, then this is asking, you have to give details. Remuneration paid, what is the remuneration paid? How much is the amount paid? Okay. All those information we need to give to them. Then you also need to give the objects of the organization. Okay, the client whom we are auditing, organization. And if you are modified or undertaking any objects, we need to report. Okay, right? We need to report that. And all these years, these were not asked at all. These informations were never asked. And if there are any changes in your objects, this was going unnoticed. Because we would not be bothered to go through that also. And tax department also, only if it is taken up for scrutiny, they will not otherwise disturb you. But now, chartered accountants were asked to report whether there is any change in the objects. In which case, if there is one that we'll have to report. We do not have any other option at all. Look at this also. In case you are granted provisional registration, there's a temporary one valid for 3 years. But of course, within 6 months, you'll have to file if there is activity. And they're asking us to report when you have commenced the activities. Okay, right? If you have commenced the activity, whether you have filed the regular application, after filing application, if you not receive the registration, we need to give these details also to the government. We also need to inform the tax department whether you are keeping books of account as per the rule 17W, the various under the 10 different hits, the various records that are required, they are keeping that. We have to report saying that what are the books of account, extra books of account, whether you are maintaining it or you outsource to somebody. Okay, right? And how are you maintaining in your computer system or with cloud, whether it is maintained in the registered office. If you are not keeping in the registered office, right? We need to report whether you have passed the resolution to keep the books in a different place, and also whether you inform the AO, income tax officer. And if you are keeping books of account in any other place, and if you have not informed, then we have no option than to report to the government. We are having organizations which have branches throughout India, which have activities in different parts of India, and the books of accounts are kept at the different places. Please note that you need to inform the income tax officer that you are keeping this records in this places. Okay, this needs to be informed to the income tax department within 7 days. You don't have much time, within 7 days from the date of the board meeting. So don't think you can have the board meeting later and then we can file that, but have it done quickly and then file the documents with the income tax officer. This is about the business, okay, right? In case you are having any business activity, right? We need to report that. Whether the business activity, okay, right, is in the course or which rates of trade, commerce, or business, we'll be reporting that. If that's what is the percentage of receipt, because if it exceeds 20%, 20%, you will not get benefit under section 11. Okay, right? Whether the business activity is in the carrying out of the course of actual carrying out of advancement of any other object of general public utility, or support service for any organization. Okay, right? And in both the cases, we'll be reporting to the government what is the percentage of receipts from the business activity to the tax department. If it is more than 20% of your total income, then your organization will not, I'll repeat, will not get Section 10 exemption. Your income will be computed under Section 1310. And you also need to give details of the projects, okay, and institutions in the gross amount receipts for the project. I mean, this is what we'll be reporting. In fact, a project register will be helpful to us in reporting this. And let me skip this because this is what we report. I mean, you will not understand much about this. The business details, the business model, will take care of that. Okay. TDS, this is no problem. In fact, I've been talking about it. This information was never asked at all, but now they want us to report. These are the TDS. This is not what taxes you're deducted from the payments that you made. This is not the one. This is the tax deducted from your income. Okay, right? I've been talking about this microfinance self-help, assisting the self-help group with getting loans from the banks or from the financial institutions. And the financial institutions, because they are helping in recovering the funds, they are paying you a service charge. Not only they pay you service charge, they also cut taxes at source also. So whenever that is happening, and all these years, what we were doing is that we will used to put under some head, common it, so that it will not attract, or this may make sure that there's not much problem. But now we'll be reporting who is the person who has paid the money, what is the stand number, and the total amount on which the tax is deducted. Okay, TDS amount, section under which TDS is done, 194C, 194J, 194H, 194I, okay, whichever section under which they've done it. And we need to classify this, okay. Earlier, even if it is a business income, most of the time it was classified as donations, voluntary contribution. But now, we will not be able to classify under a thing. If it is a business, we'll put as a business only, okay. If it's for rendering any service, investment, trade, or commerce, we'll put under that only, right? We do not have option. And so please remember, these informations are now received by the tax department, given by us, and this will be more or less accurate. Okay, right? And the business is incidental to attainment of objects of the organization. All these are known. And when you have a business activity, whether you are keeping separate books of account. To my knowledge, none of you are keeping separate books of account when you have this additional income. And computation under section 1310, we already talked about it a number of times. When today also I talked about it. When you do not have exemption under section 11, because you're not filed the audit report, first thing I explained to you, or you not kept the books of account, okay, in the prescribed form, whatever they have given, you should keep it. You cannot keep something and then say, this is what my books of account. No, right? Whatever way the government wants, you have to keep that. That is why they've introduced rule 17 WA. You have to make sure that we are doing that, okay, right? And if you don't maintain books of account, then you're not eligible for 11. And we do not file returns in time, not eligible for 11 exemption. And you violate 215 business activity, then you are eligible for section 11 exemption. In which case, your income will be computed under section 1310. I already explained that to you. Okay, right? Anyway, the PPT will be shared to you. And the voluntary contribution, those of us who are charitable organization, you know the extent to which we need to work. We need to tally this. 10BD, what we know is the ATG donations, what we give ATG donation. And there are, and we also need to report donations not reported. What are those donations not reported? They are not reported because of non-availability of identification number. In other words, they are anonymous donation. And all these years, there was a question in ITR 7, but many of you did not fill this up. But now this is not going to be this is not going to be helpful at all, because we will be reporting in our form, in our audit report, saying that this is the ATG exemption. This is the amount they have collected as charitable organization, for which donor details are not available. Okay, right? Then department can invoke the anonymous donation provision. In fact, we need to give anonymous donation also separate like this. And next one, this is essentially ATG. The other one is that donations not reported. I am otherwise eligible for ATG, but I do not want ATG. I've given the checks and all those stuff, but I'm not claiming that I do not want, so I will give those details. But remember, for all voluntary contribution, whether you want to get ATG or not, for charitable organization, you want to get the IDs, either PAN or Aadhaar or ration card. The list I already shared with you. Okay, right? And you also need to have donation for religious purposes under ATG, renovation repairs of temples or mosques or gurdwaras or church in the places of historical importance, or government says it's a public place of worship. Okay, right? And ATG is not eligible when you are receiving in cash more than 20,000 rupees. ATG is also not available when you receive donations or from another charitable organizations. Okay, right? And that can be ATG. Okay, right? They are eligible, but they don't claim. We already talked about it. So all these informations will be reported here. Any other voluntary contribution do not form 10PD. This could be religious. If you're both religious, then of course, for 10PD, this will not count. Okay, right? Sorry. And donation received in kind also will be reporting, because we'll be accounting in the books of account. They are not eligible for ATG, but we'll be reporting that. Anonymous donation, whatever we discussed now and earlier we have discussed that. So we'll be tallying this. So we'll be reporting 10BD, what is reported, what is not reported in 10BD, including anonymous donation. We also be reporting about foreign contribution, whether it is of corpus, non-corpus, application of corpus, application of non-corpus. All this information we're reporting to the tax department. And corpus donation, this is towards renovation of repairs, then temples, renovation or repairs of temples, or churches or mosques, and the other donations. Okay, right? And they're also making it very clear. The recoupment of corpus donation after 1/4/2021 is not allowed. There can be other income also. Other income is income derived from property, income of fund of the institution. This is all school income or hospital income. Okay, right? University or education institution, medical institution, income applied outside India. Okay, right? This becomes an income which is not eligible for application. When you make payment in excess of 50 lakhs, you need to give those details also. The department wants to get details of people. This may happen, in case you are constructing a building. Okay, if you're a hospital, you buy medicines from a person, and if you pay more than 50 lakhs and buy medicines from a particular dealer, you'll report that. Or any other purposes. You're a school, you're a large school, you get notebooks and textbooks from a person, the payment exceeds more than 50 lakhs, exceeds 50 lakhs, then you have to report that. Okay. And you also need to mention whether you directed taxes at source. If there are any taxes directed at source, then you have to check the details also. If you're not directed, you'll have to give why you're not directed also. Right? Of course, these are all our responsibility. We'll get it from you. Amount not actually paid. As I've been telling you, I just explained to you, only cash payments are allowed, payments actually made, not cash payment. Payments actually made are allowed, not payable or allowed as application. Capital expenditure, repayment of loan, all these things will be getting from you and then we'll reporting to the government. The disallowances also will be reporting in our report, the disallowances. If you are not deducted TDS, we'll report. If you are not deducted cash payment more than 10,000, if you are paid more than 10,000 in cash, we'll be reporting that. If you make corpus donation to other trust, we'll be reporting that. Okay, when you make donation to other trust where the objects are not similar, we'll be reporting that to you. When you make donation to any other person with a 12AB, okay, right? Objects may be similar, but they're not of tax exemption. We'll be reporting that. Donation to any other persons, we'll be reporting. Application outside India, in our opinion, we consider something is outside India, we'll be reporting that. If there is amount applied for purposes which are not as per the trust deed, this also we need to report. All these years, this were not asked to be reported. Okay. Especially this one. These are all the main things that were never asked. Amount spent outside India. Sorry, amount applied for purposes other than what is given in the trust deed or memorandum. So please be careful what you are doing. Okay, right? Whatever you are doing, it is as per your a memorandum or trust deed. Any other disallowances will be reporting. Tax under 115 DBA, when there is violation, here this is a deemed application. The next year, if you spend, you're not spend it, then we'll be reporting. So that this will be taxed at 30%. Then again, 115 BBI, this is with reference to 11.2, disallowances or violations. What is 11.2? We talked about accumulation or setting apart for a specific purpose. The maximum period is 5 years. Any violation in any part, we'll be reporting that. Okay, right? If the money is not invested, we'll report that. If you're spending it for any other purpose, we'll report that. Okay. Or if you're utilizing, you're not utilizing within 5 years, we'll report that. Okay, when you give donation out of that, we'll report that. Any violation, we'll be reporting that in our audit report. So please be careful what you're doing there. We also be reporting about, this is under 115 BBI. When there's any benefit to specified person, the violated portion is taxed at 30%. So that also will be reporting. Similarly, investment in 11, other than 11.5, if there is any investment other than 11.5, we will report that also. Amount accumulated or set apart more than 15%. This is a normal one, we will be reporting that. Application outside India, we will be reporting all these things to the tax department. This is income chargeable under section 11.12.2. 12.2 is that, I think I already explained that to you. If you run a school or a hospital, okay, right? When you are giving any services, okay, at concessional rate to the specified person, the concessional amount that are given will be chargeable to tax as income. Okay, so we'll be reporting that. We do not know how we're going to capture those details, but we are asked to report all these things. And this is the ATC corpus donation, and we'll be reporting. I don't think any of you are having this facility. And if there is a business as a property, I don't think any of you have this also, so let's not worry about this. Capital gains, if there is any, we'll be reporting that. What is the value of the sale value, and how you have used it, whether you use it for purchases, any assets, or if they made before 31st March, we'll be reporting that. And in case of charitable organization, if you spend on religious purposes, that also will be reporting. Okay, right? We'll be reporting because to calculate 5% of the total income for religious activities. If it goes beyond, from our reporting, your cases will be taken up as scrutiny, or you may be asked to pay taxes. Specified violations. What are the specified violations? We already discussed that. Okay, right? When you see, note this, all these things, other things will not result in cancellation of your 12AB. When we report the other violations, when we talked about section 1310, 115 BBA, these are all penalties, okay, right? That will not result in cancellation of your 12AB, income tax exemption. Whereas when we report the specified violations, this will be taken up to the Commissioner of Income Tax, and he can initiate cancellation. So that is why very, very important, because this is a specific question asked to us. And this is what Commissioner is expected to do, Commissioner's office rather, or Income Tax office is expected to do. But now government wants the chartered accountants to do that, because we step into their role, their shoes, and then we help the government. So if you have applied your main funds for objects other than the objects of the trustee, will be reporting. If your income from business or profit and gains of business, which is not incidental, will be reporting. Even if it is incidental but not made any books of account, will be reporting. Okay, then if you spend on private religious purposes, will be reporting. The benefit is for a particular religious community, will be reporting that. Okay, right? I'm sorry. If your activity is not genuine, I do not know how I'm going to report that, but I'm asked to report that, okay, right? As the auditor of your organization. And the next one, whether you are compliant with any other law, okay, right? For the time being, this also will be reporting when as part of my audit report. This is just the important reporting points I've shared with you. There are other points also I'll be sharing. That is the main reason. This is the primary reason why I coached you for the last 5 days. Yours is the third batch, and each batch there were more than 50 participants participated. The idea is to enlighten you. The idea is to empower you. The idea is to teach you what is the requirement, so that you will comply with that, and you will not be found wanting. When I come to you for audit, when my team comes to you for auditing, because I'm training my staff here in this office. Tomorrow also we are having training here. Last Saturday also we had training in the office. We keep on having this training. Like what is happening, we train for you because you find it difficult to give one full day. I mean, we kept it 1.5 hours, 1 hour every day. Whereas in our office, we had full day training. Not once, twice, thrice. Tomorrow also we will have training. I try to equip my office, train them so that when they come, they will do their job correctly. Because I do not want to be found wanting before the tax authorities, and I do not want them to take any action against me or my firm. So, mind you, please remember that if there is any violation, I'll report that. I will not give any concession because I don't have the freedom to give concession. I'm not the authority. I'm not the designer. I'm only asked to report. The decisions will be taken by the commissioners, income tax officers. Okay, right? So I honestly request you. I'm sharing all these main videos, recordings, the PowerPoints to you so that you will listen to this video. You will go through the PowerPoint presentation again and again and make sure that you are fully compliant with the law and you don't have to pay any taxes. I want to tell you again, if you follow the law correctly, completely, without any mistakes, okay, right? There is no need for us to pay taxes to the government even now. The laws are still favorable. Now government wants, to make sure, government wants to ensure that we are compliant of the law. All these years, we took it for granted. We took it for granted that what I'm doing is the law. But today, no. Government says this is what it is. This is how you should do it. That is where for the clarification only more and more are coming. And it is high time that we follow and fulfill those compliances so that we are not found wanting before the government, and there is no question of any taxes or any liability for us, any penalty for us, and we will carry out our activities in a way that will bring blessings and benefit to the public. Because the moment when you get to litigation, I tell you it's not going to be easy because we are involved in tax litigations. I know how painful it is, how cumbersome it is, how it saps your energy. I know that. So my humble request again is to go through all these things, and we will put all of you in our group, even those who are not our clients in our group, so that whenever you have doubts, whenever you have clarification, please put it in the WhatsApp group. We'll try to help you. The idea is to help you so that we follow the law of the nation. Because as a good citizen of India, we'll be compliant with the legal requirements. Okay, that's all I wanted to tell you. Thank you so much for patiently listening to me. If there are any questions, I'll ask Monisha to share it in the screen. Thank you so much. Monisha, I've answered both the questions, Monisha, before we started the session.
Sir,
Okay,
These are the
fine.
only questions that
Any
has
other
been
question that I'll
posted.
answer? Otherwise, we can wind up the session, and I'll inform you when we are having our main session on TDS. And TDS will be only one session. I had three main groups, but I will not be able to do for three groups. I will do only one group. And what I will do is that after that, I'll share the recording with you. Okay. This recording can be used by you in your office. May ask your staff to listen so that all of you will know the requirement and will be compliant. Okay. Thank you so much. God bless you all. Thank you.